Good morning, everybody. This is Dee Dee with Power of Three Trading. Thanks for joining. I'm not here just to teach the strat, but to teach you how to profit from the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith, at Smiths in the Black channel, Robin the Black on Twitter, or at sepiagroup.com. I don't know about you, but yesterday was a very difficult day to trade. So we put on yesterday, we put on a trade. We talked about NVIDIA. I actually did not trade it, and I'm going to tell you why. Yikes. So let's just go back. I'm going to blow this up a little bit so we can see our 90. We draw broadening formations, right? We said we wanted to go long. See if we can see this. We wanted to go long above 171.40 with CCI above 100 on the 18-minute, right? So that's kind of my strategy using the momentum indicator. And then we wanted to go short below 167.50 with CCI below zero, preferably below negative 100 on the 18-minute. So what we were waiting for was for the market to open and come up with our plan. So we draw broadening formations. This was the high of the previous day. So we knew this is where we got our 171.40 from, right? So the high was 171.40. So we want to go long here. This is going to be our first target, right? You can go back previous vid to see kind of where we drew our broadening formations because we knew we want to get outside this range here. So we want to be outside this range. So we wanted, if price went up, we wanted to go higher. It break above, here was our next level. Take this out. If price traded lower, so below this inside bar, we were going to go short, but we knew we were going to be in this range, right? So we just drew our broadening formations to take out these big candles here. All right. What did the market do? Touch both of those lines and just traded like crap. And so again, here's my strategy. If CCI is above plus 100, we're looking to go long. So here was the open, guys. It gapped up, came right back in that first 6 minutes. Had you been quick to the draw, maybe you could have taken this outside bar. That's not generally how I trade. So I'm waiting for this crossover, right? Waited, but I didn't like the open. I waited for the 18-minute close. So I said, okay, let's see what happens in the next 18 minutes. What did we get? So remember, you need a TTO here. So you had this outside bar, which in and of itself is a broadening formation on the 6 minutes. And then it goes two down, two down. So if you're waiting for that 18-minute flip, you need your TTO. What does it do? It creates another outside bar. So we don't have our actionable signal yet. So it goes 3, 2 up, then comes 2 back down. This was now the next 18-minute flip. You're inside this big mother bar. I don't like this. I call this like piano keys. When you have changing color every other key, I call that my piano keys. Nightmare. Don't like these trades. So I didn't trade it. Here's their, keep in mind, this traded up. Here's right in the 10:30, so 60-minute flip. So if you're in the 60, so the first 60 minutes was just very difficult trade. Big outside bar, did nothing. Next 60 minutes, you could have taken a reversal here. This was our low bar. We said we were going to go short if it traded below this, but given the nature of these moves in that first 60 minutes, it hit it on the reversal, came right back up. Opportunity, you could have taken that long. Understanding where, again, this is why we play in our day early. Here was it hit the top of that range, which was the high of yesterday. The prior day's high. That was our broadening formation we drew here, right? We drew it on the 90. So once after 60-minute flip, you had an outside bar, 60 trades up, crosses back above this level. You could have taken that that long and then use that broadening formation as your stop loss. All right. So as this comes down, you have a 3, a 2 down, an inside bar 2. Let me look at the 15. Let's see what that would have looked like on the 15. So you had a 3, 2 down, 2 up, 2 down. Again, first 60 minutes, guys, it was just ugly. And then you had this move here. All right. So I like my 60. I like my 15, 18-minute crosses. All right. So this cross back over with some momentum. You can see this kind of double bottom, if you will, on a CCI, but it traded down, traded back up, but did not. It just peaked plus 100 here. You can see this move here. Don't like it. It's inside 60. So you want to wait for that flip, because you got to ask yourself, is it going to take this 60 green? Maybe, but maybe not in this initial move to the upside. So let's wait. So 60-minute flip. Then you can catch that move here to the upside. But this would have been a difficult trade. I didn't trade it. I just do not like these opening outside bars trading against time frame continuity, and you go 2 up and coming back inside that day. So we could see, again, guys, last week of the month, last week of the quarter, expect more of the same, but we could see this go 2 up now because we had this 2 up traded down. We'll see what happens. Or it could go 2-2 reversal. I don't know. Tesla, I did trade, and again, it was just a nightmare. It looked a little different on the 60 because it was still above plus 100 on the 15 and the 18, but I avoided it. Let's just go back so I can show you what I did here on Tesla. So again, we drew our broadening formations. Let me show you this quickly. We drew our broadening formations. We knew if what we want to do, Tesla's traded above this range, we want to go long, right? So we were on the long above 738.20, which was the high of this day, the prior day. And this was going to be our first target. And we drew that from the high of this day, right? So, sorry, 90, let's go to 90. All right, so we drew this off the 90. So we knew we wanted to go long here, and we drew this from the high of this day. High here, high of this day, here. So again, what happened? Tesla, it gaps up, hits the high of our broadening formation. I'm doing absolutely nothing here. It trades down, but it's hanging, it's trading above, unlike NVIDIA that actually traded down. It had crossed plus 100. Tesla didn't. It was a strong move to the upside. I don't know what was going on. And Rob will say, if you don't know what to do, do nothing. So when I saw this and it did not meet my criteria, it had not crossed below 0, so plus 100. This was a bunch, I mean, again, piano keys, but big ranges. So this range was 756, 732. Yeah, guys, I mean, 20, 24. This was 751 to 730, another 20. This one, 750, 34 to 734, 16. I mean, just big ranges. Could you have made some money? Yeah, maybe. I made a little bit here at the 60. So this was 1030 at the 60 flip, right off this inside bar, and it immediately came down. I held it, traded up, came back down, but I didn't have a good exit, so didn't make much money off of it. Then here was another, right at just before the 60 flip, I tried to take this back long, don't know why. Well, I do know why. I talked about it offline, but this was just a poor move because we were right here and we were down on the 90, but I was trying to catch this 60 flip. to the upside, didn't happen. And then finally, price broke down. So I actually reversed it off the 60, traded this to the downside, got triangled out here, but I held. Just poor trading, poor trading. I ended up with a small loss for the day. It traded down, so I made some of my money back to cover this loss here. But if you were trading this market yesterday, hopefully you didn't get killed. You know, I did take a loss, but I didn't get killed. And that's how you stay in this game. You know, if it doesn't meet your criteria, you know, you set up your plan, you have your strategy for the day. If it doesn't meet it, guys, just don't even trade it. Yesterday was difficult, and so I would imagine, you know, if you're trying to trade this choppy noise here, how that was difficult to trade. So I definitely can empathize with you, because I didn't get caught up in the first hour, but I certainly did not meet my goals for the day. So not happy about this trade. All right, so I just wanted to share that with you guys. Here's the scanner. I don't see a lot going on. You know, maybe Disney snow. Disney is up 2.25%, snow 3.5%. Nike had some noise yesterday about I think some supply chain, but yeah. Let's look at the cues. I'm just not excited. So here's what we saw too on the daily. So we drew this line yesterday, right? We said, you know, it's got to take this level. And let me show you where we drew this. So we had this 2 down bar. We were talking about the gaps. And when let me blow this up so it'll be easier to see. So when we were talking yesterday, I believe we talked about the gaps. I said, you know, price had traded above this level here and Friday's trade, but it needed to take this gap. And so what I did was I drew this trend line from the low of this 2 down bar to this inside bar. And you could see it tried to take that, it gapped up and came right back down. It didn't even hit it. And so it's hard to gauge, guys. Again, you know, will the market try it again? Maybe. It's hard to say. So we'll have to, you know, we still have another couple hours before the market opens. But right now in pre-market, it's trading up a tad. But just think about it, right? This is a 2-up candle, but it traded down. It's certainly, because it's hitting it, you know, we're coming back up into this range. Don't know if there's enough momentum to drive it. You know, here's where CCI hasn't crossed back over yet, but it looks like it's trying. So with that in mind, let's be diligent. Don't try to force these trades, because like I said, you know, we're here at the end of the quarter. Let's go back. We're here at the end of this quarter, and you know, obviously we're not going to take the quarter green. All right, but the market does look like it wants to test a reversal. Just think about that though. When this flips in July, you know, it's got a big quarter it's going to sit inside. So just expect more of the same, right? Here's our month. So you can see it's now back inside the previous month. And I don't mean inside bar, but it's inside the previous range, right? So it hit its low and it's traded back up. But are we going to take the month green by Friday? Wishful thinking. So just be careful, all right? Let's look at the SPY, same kind of thing, right? Guys, big red quarters, big red month. It's certainly trading back in, but we'll see if it tries to take this. So again, inside, we took this gap inside this bar, but here's your target at around 394, 395, if we can get price to go to continuation, right? So this was a 2 up, it just closed down. But this is 2 continuation, so it could just been a TTO on that daily and continue to the upside. All right, so how do we play this market today? I have literally nothing on my list. Let me see, these were stocks that I looked at yesterday. Let's remove these, those are old. Did not trade. Yeah, there was a TTO on Netflix. Missed that. Let's look at the daily. So got this hanging man here on Netflix. If it goes above that, there's potential. We got all these hanging man patterns. Those are reversal patterns. So it would definitely have to take the highs of yesterday. Let's get rid of those lines. Yeah. If you trade anything today, it needs to trade. Let me remove these lines. If you trade anything today, it price action has to trade above yesterday's high. I do not, and again, so you know how I normally draw my lines. If this does not go to 2, what we could do, because I still like the chips, we have to get these, we have to get price trading above this range because we want it to go 2. So yeah, definitely. As a trade above 173 for me to even be interested, because the high is 173.30. Yeah, it's 172. I don't want it to trade up and then get stuck inside that range. Yesterday's high, let's look at Amazon. Yeah, I don't like anything, guys. Into the week, snow is gapped above yesterday's high. But look at snow. It's trading above yesterday's high. CCI is above 100, but trending down. We'll look at snow. Disney, I don't like Disney as a trade. Let's see, Nike short. Not a lot of movement in Nike. High volume, but the average daily range is only a few dollars, so we really have to be careful getting in a good entry so the option can move on those. All right, so I'm going to chart snow for you guys today. I like that it's above 100, maybe you get a reversal. Everything else is below 100. Kind of stuck in a range. We want continuations, but what you'll find is if price is trading higher, they get to a point of exhaustion and we have good reversal patterns. But when they're just kind of stuck in a crowded space, it's hard to get any movement. All right, so we'll do snow for the vid. Let's see, we'll do it off the 90. Let's do it off the 90. Okay, so we know we want price to trade above yesterday's high, which is this candle here. We have this outside bar here. So it looks like it's trying to take this range. If price goes, if the market trades higher, maybe we can get this move to the upside. So price trades above this range, yesterday's high. So we're going to take the high of the day to the next high in this candle. Let's see what that is. 152.20. The next highest low in this range. 152.20. 152.20. All right, looks like it's going to be this guy, 152. So we'll draw our broadening formation from the high here to this high. And the move is above this trend line, we'll look to go long. Now, because price is already trading above this range here, we're in this range, we'll draw another broadening formation off this inside bar back to the next highest low in this range. That's 153.33. We got this little guy here, and we'll make that our next broadening formation. We got this high here. Let's look. Yeah, it's pretty much where that line is. What else do we have in this range? We have this guy here, which is a 2 up. Two up, 2 up. We have an outside bar. We have this 2 down. I'm going to draw this 2 up bar to this 2 down. We got this outside bar here though. Let's do it this way. We got this 2 up, we got this 2 up. They're pretty close to each other. Next highest candle, higher low in this range, 153.48. The 7, no, what's that? 158.48. I'm gonna draw it to the low of this candle. So basically, well, let's do it this way. We got this high here, this outside bar. So we'll draw it from this outside bar to this bar. And then I'm going to draw a horizontal line to cover this 2 down bar right here. All right, so we have a 3, 2, 2. So if price trades above this range, this is this outside bar here. We have an outside bar here. I have this 2 bar here. So if price trades above this range, and then we'll look to see if it'll go higher. But this is how we're going to play it. All right, so if price trades above yesterday's high, this 2 down bar here will be our first target. If it trades above this range, I don't like these angles. This angle here is this guy. I'm gonna leave that. I'm gonna leave that one. But this one I don't like. Let me see. No. I'm gonna excuse me. I don't like that angle. So what I'm gonna do is I'm gonna draw another line here at this 2 down candle. We're gonna do this angle. I didn't like this angle because I think there's gonna be a lot more resistance before it ever gets up here. And you can see that here on these candles. You got this 2 up bar here. I didn't like that angle, you know. Yep. So when I don't like those angles, what do, guys? I draw my horizontal lines. All right, so I have this 2 up bar here. And what I'm looking at is if price trades above this range, this will be my first BF pivot, thinking if it trades above this range, this will be my next. This is a 2 down bar. If it can trade above this range, it'll take this bar out here. And then maybe we see price action trade higher. We do have another 2 up bar here. All right, so just be careful. Don't know if it's gonna go that high. So these will be my 90-minute broadening formation levels. We call them broadening formations, but in this case, these are just pivots at the 90-minute highs and lows. Okay. All right, so yeah, because this is your upper range. This is the upper range for this previous day. I'm not feeling it. I don't think it's going to go that far high. All right, so on the downside, It's got to take the low of the day. We got a low here. So this is the low of the close. So if price trades below this range here, I'll look to short, and it's got to take the low of the day. Next highest low in this range will be what? Got to get outside this guy. This is a 2 up, and we have this range here. The low here. We got 2 up, 2 up, 2 up. So I'm going to take this low here and draw my next low, highest low in this range will be where? This inside bar here. All right, so here's what I'm looking for. You have all of these 2 up bars, so it's got to go 2 up, 2 down, 2 up, 2 down, 2 down. So I'm looking for, let me put that on that 2 up bar. So what I'm looking for is price to trade, hang on one second, 137.70, 137.50, 37. You know, 137.70, next highest low in this range. And 38.30, here's an outside bar. All right, so here's what I'm looking for, guys. If price trades lower and it trades below this 2 down bar, I'm looking to go short. This will be my first target, which is the low of the day. So this went 2 up, 2 up, 2 up, close down. So price trades higher. This will be my first target, second target, third target. We're just tracking price action up at these pivots. If price trades and hits any of these and starts to trade back below these ranges, we'll look for CCI to give us confirmation. I prefer CCI to be below 0 on the 18 or 15 minute, or continuation to the downside. Just the opposite here. We're looking to trade CCI below, if price open and trade below this range, this will be my first target. And then I'm looking for CCI to continue to trade lower with the CCI below -18. So here we want CCI to be +18 at the open, plus a negative below -18 at the open. All right, so let's write it up. All right, so we're going to go short below, but remember we have to use those signals, guys, on the shorter time frame. So we're going to go short below this range. I'm going to call it 147 with CCI below -18. I'm sorry, -100 on 18 minute at open. Okay. And then we'll go long above. I want it to be above this range, so we'll call it 153. 153 with CCI above +100 on 18 at open. Now these are gappers, so this is a gapper. So if it reverses, reversal, then we'll call it if. We'll say if reversal, gapper reversal, then we'll go short with our win CCI cross below plus 100, or sorry, below 0, 0 for continuation. Down on the side. Okay, so I'm putting that there just so you know. It could reverse before it crosses 0. So let's say it trades up here and reverses, trades back in here, but it's not below 0, but it is below plus 100. So it crossed back below. Let me go back to the 18-minute. So let me say it again. So let's say price trades up. It's below negative 100 right now. So let's say price trades up and it does not trade above 100 and reverses here, then and comes back inside this range. I'll be looking for my actionable signals: 322s, 212s, 222s to the downside. If this stays, if 18 minutes stays below 0. I'm sorry, if the CCI stays below 0 on this 18-minute. But because it's a gapper, it may gap above that. And what we're looking for is on a reversal, back inside the previous range, with CCI giving us confirmation of a continuation to the downside. And that helps us with potential 3s. So if this gaps up, goes 2 up, comes back in, crosses below 0, potential outside day. All right, so I am going to wrap it up with our scripture for video on Proverbs 21:5. The plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Again, this on all of those, and I say all of it, but you can see the consistency on these trades yesterday, guys, how the market just was nasty in the first hour, right? Hard to trade, and you have to understand, again, we talked about this yesterday, you have to decide what time frame you're going to use for your actionable signals. Is it the 1, the 2, the 3, the 5, right? 6, 10, 15, 18, 30. If you're waiting for an inside 30, then you shouldn't even be sitting at your computer here, right? Because that's not going to occur, right, until the bottom of the hour, right? Because you have to wait for the 60 to form, the 30 to form. So you have to decide, and this is really just my speech again from yesterday, which time frame are you looking to trade your signals? And I know a lot of you guys are looking at the 30s. Perfect. Your signal is on the 30. That means you don't trade until the bottom of the hour, right? And then you're looking for your moves. But I tell you guys, if you're trying to trade off the 30 and you're waiting to take your entries on the move at the open, you may get triangled out. So you just have to be careful with that. You may have to go to a shorter time frame. In my view, and I'm going to say this and I'm going to shut up. If you're going to trade the 30, do this. Do the 30-90. Do the 30-90. Don't get stuck inside 90. Use your 30-90 strategy and trade off of the 90-minute and look for inside bars on the 90-minute flip. That's how I would trade the 30s. I'd go 30-90 and look for those inside bars off the 30-minute flip. I'm sorry, off the 90-minute flip. All right, that's all I got, guys. I appreciate you joining. Have a great rest of your day. Take good care, everybody.